Well, I'm going to do a request.
Matron, take them away.
And a warm welcome to one and all. This your first time here? I'm the big fella Scruff. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do crack the subscribe button. Genuinely helps. We'll bash on. So what are we looking at today? Well, it's a little salute to Mr. 300 Pips. Here we are. In the Telegram group. If you do want to come along to the Telegram, it's free. There is a link for it in the description below. And he was requesting would I do a video on the 5%ers bootcamp. So that's exactly what we're going to be doing. So what is it? Why are we doing it? And should you do it? Well, the 5%ers, if you haven't come across them before, what's called a prop firm, proprietary firm. And the idea is they put the money up for you to go to market. You trade with that money and then you have a profit split. Now, the bootcamp, what they're referring to, is an excellent program for kind of a beginner trader that roughly knows what they're doing. Because one thing I'll stress, and I do stress this with the prop industry, on trading in general for that matter, if you're not really consistent, then some of the programs that you see out there are not really for you, because some prop firms can be very, very expensive. They have time limits that are, personally I would say they're a little bit too tight, and you'll throw quite a lot of money at it. Now, with everything, you need to learn your craft. Now, the 5%ers I've dealt with for, well, it's coming on over 2 years now. And they've looked after me in the sense that they've given me the opportunity to enhance my own personal funds, but also be part of a bigger community. And that's one of the good things about the 5%ers. They're interested in the trading community. And case in point, if I flick this over, we are going to be at an event called Traders Day Live. Let me just pull this down, which is this. This is sponsored by the 5%ers and a few other companies as well. And it's an expo in London. And if you look at the agenda, it's all about education rather than just come and buy from us. It's genuinely giving something back. And you might recognize some of the names. Well, what do you know? It's me. I'm going to be presenting at that expo. Not only am I presenting on the stage where I'll be talking to you about growing small accounts, and that's where the bootcamp comes in. I'm also on the experts channel, panel rather, for the Q&A, and I'll be doing all of the meet and greets as well. So what is the bootcamp? Well, as I'm saying is, if you're not really consistent, you need to learn your craft. So that's what that expo is all about. Now, within the 5%ers, they also recognize this. And they, well, let's just say they're going to give you the tools to be better. Because for all I'm saying you should be consistent to trade, you should also have a little bit of skin in the game. And what I mean by that is something at risk. You know, you need to see the realization of emotion. And the bootcamp is perfect for that. Because if we pull this down, and you'll see there are 3 basic setups. You have what's called the hyper growth, which used to be called the instant funding, which is what I use. Now, that is straight into market from day one, past your first milestone. That's it, you get paid and away you go. They have the high stakes, which is kind of aimed at those that like a lot of action. But what they've done with that is they've reduced the cost right down. You can go into market for $39 and pass your challenge, get funded. But today we're going to concentrate on what I think is best for a beginner trader, and that is the bootcamp. Now basically what the bootcamp is, it's 3 phases. And as I was saying earlier on about some prop firms giving you very tight deadlines, you have 12 months to pass this thing. So you've got plenty of time to achieve your milestones. And at the end of it, you end up with a 6-figure account. So you can either have the 100K bootcamp, or you can have the larger one, which is 250. And how does it work? Well, here we are. So your buy-in is 95 euros, which current rates is about 78 quid for me. So really, that's nothing. Because if you put 78 quid or 95 euros into a brokerage, sort of like Black Bull, for argument's sake, that has decent leverage, you can trade it, but it'll take a long time to build up the account. The way that this works is very simple. Yes, you've got a maximum of 12 months to do it. You can do it in a lot quicker. You might do it in sort of the first month, then do the next challenge the next month, and the next challenge the next month. Do it in 3 months if you're really good. If you're intermediate, maybe spend 2 months per segment. Get you through it. But this is the basic premise of it. So if we just take it on the 95 euros, your first challenge is you get a 25k buying power account. Now I call it buying power because you should always pay attention to the drawdown. And this is where Mr. Pips was on about. How much should your risk profile be? Well, your maximum loss is 5% of that account, which is 1250. Okay, so the account itself is 1,250. Use that as your risk profile. Now, from there, it's a very easy, ready reckoner to work out your position size. Personally, I work on $1 for every 1,000. So in this, it'd be $1. You know, do your trades, and you get $20 here and $20 there. Sharp adds up, and it doesn't take long to get to 1,500 if you control your position size. Because if you control the position size, you'll be in the game for a long time. And that's what happens with traders. A lot of the time they go in and they think, I've got 25k to use. So they'll put a position size on that is way too big for the account, and they blow it. So rule of thumb, $1 or a pound or a euro for every 1,000. Simple way of working it out. Or you can take it right down, sort of 10p for every 100. So there, $1.20. Okay, and you'll be surprised how quickly that adds up. Okay, now the way it works from there, once you've achieved that milestone, they give you a next set of funding, which is 50k, and the principle is exactly the same. 2.5 drawdown to 3,000. Likewise, 75, 3,750 to 4.5. But what you've got to remember is each time you add profit to each one of the milestones, this maximum loss increases, which means you can increase your position size. So this is just the starting grid. So you're not locked at $1 all the time. Now what happens from there, once you've passed your 3 evaluations, you'll pay an additional fee to unlock the 6-figure account. And there it is there. It's 205 euros, which again, it's not a lot. So you've got a small amount of money on the table for a huge upside gain. So your ROI, which you'll often hear me talk about in my videos, because I don't work on risk reward, I work on ROI. ROI is return on investment. So you're essentially you're putting $300, is it $300 or €300, whatever it is, onto the table maximum, and you're getting a 100k account. Well, from that 100k account, you have 4,000 of drawdown. Well, think of it this way. If you put £300 into a broker, how long would it take you to build that up to 4k? Quite a bit. And if you're self-funding, so not only are you trading it up, you're funding money into it. It could take you quite a while. This will snapshot it. Now, for your first phase, you'll get a 50-50 split. So you make 1,000, you get 500, the company gets 500. From there onwards, you get 75-25. So it does make a difference when you go up onto the higher levels. And I know this, 5%ers help pay for this house that I'm sitting in. They paid totally for the car that I drive. And the bigger payouts that you get, because it used to be only 50-50, and then they started edging it up. And you can go all the way to 100% payout. Now, the way it works is very simple, because that question's asked quite regular. How can they pay you 100%? It's because you have what's called a slave account, and they have the master account. So whatever your trade has done, it's replicated onto their account. So you keep what's in your account, they keep what's in their account. Very, very simple process. And this takes you up to a life-changing sum of 4 million of buying power. That's a hell of a lot. That'll give you sort of 160k loss. Now that will change your life for a small amount of money. Now let's say it takes you 2 or 3 years to get up to 4 million. It's a small price to pay, but on the way to that, you are still getting colossal payouts. Because one thing I would stress is you take your time. So how would you do it? What's the easiest way to do it? Well, common sense is the easiest way. And what's common sense in trading? Break it down to its smallest denominator. So first of all, learn your craft and stick with one single strategy, 2 at best. And what I would suggest is 1 day trading, 1 swing trade. Always keep an eye on your position sizes. So if you're working on sort of $1 a thousand, well, that's 1 position. You can then break that position up into small little chunks, so your dollar can then be broken up if you want to pound average into your trade, and trade no more than 2 trades at once. Okay, so you can have 1 swing running, 1 day running. That'll help you. When it comes to a risk profile, risk profiling is very, very simple. The one I use myself is a 10% risk profile. Now, a lot of people will bulk at that. They'll go, whoa, hold your horses here, guy. What do you mean, 10% of the account? Everybody tells me it's 2%. Everybody tells me it's 1%. Where the hell are you getting 10% from? Well, it's a risk profile based on a week. So whenever you see me go to market, I'll put 10% of my account up that week. Now, I'm tending on trading 5 days. Break that 10% by 5, gives me 2% for the day. I look to trade roughly twice a day. So that really equates to 1% a trade. But if I'm stupid enough to chuck all of my 10% onto the table on the first day of the week and I lost, I can't trade the rest of the week. That's a simple risk profile. So if you've got £1,000, you can say, right, I'm going to afford to lose £100 this week rather. Break that down by 5, means 20 quid a day, 10 quid a trade if you're trading twice. Very systematic, simple way of breaking your trades down. Then use the lot size that I've just told you, $1 per 1,000. That'll sort that out. Stop needs to be where a stop needs to be. So work on 2 structure points. One of them needs to be a support and resistance. The other one can be a moving average or the swing of a marketplace. That'll protect the account. Why is that? It'll definitely test one, and if it goes to the other one, you're probably wrong, so you need to get out. Another way of doing it also is, once you know where these two structure points are, you know where your stop is. Measure the distance from the stop to your entry point and ask yourself a question. Can I afford it? So if you know how much you're allowed to spend that day and it costs more for that trade, you have two choices. You either don't trade it at all, or you half the position size. And then if you half the position size and you ask the question again, so just for easy figures, say the stop is sort of 50 pips away and you're on $1 a pip, that's going to cost you 50 quid. Now if you don't want to pay 50 quid, half it. Go in at 50 cents, 50p or 50, whatever it is, you know, and then it costs you 25 quid. Are you happy with that? I'm not really happy with that either. So drop it down again. Just keep halving it till you're comfortable with how much you're willing to lose. If you're comfortable with how much you're willing to lose, then you're at peace with the chart. And if you're at peace with the chart, you'll trade it far better. And this is why I'm talking about skin in the game. You need to know how much your trade is going to cost you, not how much you're going to get out of it. That'll look after itself. It's how much the trade will cost. Because the stop has one job: protect the account. That's it. Has nothing to do with the trade. Protects the account. Once you've agreed to that cost, you should know roughly where your target is as well. That's your trade. And that's how you pass these things. You go in defensive rather than aggressive. And if you build it up, you make money. So that's the bootcamp essence. And it's suitable for beginners. If you do want to try it, there is a 5% discount link down in the description below. 5%ers were kind enough to give that to me for you guys. I trade these things myself. I trade the instant fund, and it's on the same platform, which is MT5. And I'm always about. So if you're stuck, just ask. Or come down into that Telegram that I showed you. The link's in the description. It's all free. There's plenty of the guys there from the 5%ers, and they'll help you and they'll talk to you. If you go to the 5%ers Facebook page themselves, again, they built this because they want a full community. There's a lot of help there. I'm in it quite regular, and by all means, just ask. So there you go. Give it a go. It's a worthwhile program, and it's buttons to get into it. So as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.